Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do again our commodity daily technical analysis update. I'll be giving you my financial opinions on it. What I do is I look at the dollar yields, which are basically tied together maybe like this. I work through precious metals and then a lot of the commodities and ETFs that I follow. We're going to go through, maybe we'll do some pattern recognition. I'll show you guys some pattern recognition on fractals. Maybe you guys get a little bit more confident in what's going on here. What fractals are is they're just repeated patterns over time on different time frames. So it's humans interacting with each other, the herd mentality creating these patterns. And for some reason, and it's unbelievable, and I am in somewhat disbelief that these things repeat so well, that we get these things repeating over and over. So we'll do a little bit of this. I do this a lot on the website and give you guys a little bit more confidence to kind of tell us where we're at. That's at finding-value.com and the platinum membership. That's what I'm going to go forward with. The silver membership will eventually go away. So let's dive in. We'll do some of this together, and I'll show you what I mean by some of these fractals and stuff. And maybe we'll do it on a couple of them. So let's dive in here. We're going to start with the DXY. So the DXY last bull market, commodity bull market, it scribed out from 1999, that's the bottom of the ratio here, all the way to the top of the ratio. Midway in that, we saw a declining dollar. Why do we have this? What is the reasoning of this? This is the tightening portion. This here is the loosening portion and or the portion where we'll say the stock market wasn't as weak. So the stock market did better from about 2002 and onward. That's from this point to this point. And then we got a little bit of tightening of interest rates towards the end of this. So let's take this pattern and see if it actually, if we were to line this up, because we had an increase also. So here's the bottom of the ratio, an increase in the dollar. Then we had a decline in the ratio. And let's just kind of put this up here and look what we got here. It's kind of funny. I didn't scale this or do anything with it. So if I dive in here and kind of just put it up like that, and what we basically have was this was the peak. It came on down last bull market. We came on up, and maybe this, it's not going to scribe a perfect pattern the same. But that's what happens if it were to repeat like last bull market. Now I'm just going to do something on the lines of this. I'm just going to kind of squeeze it up. Because, maybe it looks something like that, where we come back down and maybe we come towards this bottom portion there. Something like that. And I squeezed it up a bunch, and where we get a top in the 2024 timeframe. Now, again, I don't know. I don't have a crystal ball. I'm not sitting here stating that I know what's necessarily going to happen, but this is what it looks like kind of jammed up. Now, the DXY still looks like we could go higher. And we've got lots of buying pressure in this vicinity here. And what I look for are large buying candlesticks and then a small pullback on the red candlesticks. That is usually a continuation pattern to the upside, that candlestick formation. So when you look at this, and when we look at the dollar, this still looks like we could potentially run higher. I don't see any reversal candlesticks anywhere around us, at least not yet. And I will hold that opinion until I see some sort of reversal candlestick pattern or a pattern hitting some resistance line, something. So right now we are still, I'm biased to an upward move until it changes. The 10-year yield is continuing higher, up 0.9%. Yields going higher and a tighter monetary policy will bring the dollar DXY up. That's relative strength, the DXY. It's not absolute strength. So that's been going up. And then the 30-year yield's also going up here. And it's a pretty strong candlestick. It finished strong right at the end, and we continue to go higher in yields. Now, the 30-year went up faster than the 10-year, so the curve is normalizing a little bit as we move on higher. Bond prices conversely go down when we have higher yields, so I still think that the trend's in place for lower bond prices in the short term. This is all short-term movements that I'm talking about. And then the TYX-TNX ratio, again, when this is low, and we can be down here for a while, We can go down like this. We can even go a little bit lower. When this ratio is heading lower, the curve is inverting. When the ratio is uninverting or normalizing, it goes up. Generally, when this goes up, this is favorable for the stock market, kind of a low inflation, low interest rate environment. It means the curve is coming back down, generally speaking. That's good for precious metals. Precious metals, this is probably the best indicator for precious metals. And when this goes upward, precious metals outperform. When it goes downward, it is unfavorable. Doesn't mean that every single day it goes down, it will 100% correlate with the price of the metals. It's a general loose correlation. Think of it as a correlation that's 50, 60, 70% correlated, something like that. Looking at the CRB index, we were down slightly today. I think oil was down slightly today. The CRB to S&P 500 ratio, this does look like we could potentially try to put in some sort of bottom at some point here. We've had a double top. We've pulled on back. And what I've usually seen in this is you get a large run. So what basically what we're doing is this is wave one. We get a large run up, generally in a three-wave pattern. It's kind of hard to see there. You pull back, and this here is a double top for sure. You get one wave, pull up, second wave, pull up, third wave. And then we fell back down a little bit more. And I think we're getting closer to a potential bottom in the CRB to S&P 500. Maybe it's got a little bit further to run. Hard to say in the short term. Overall, though, big picture view, this is what I'm looking for. Wave one, a pullback where some spot we bottom. Now, we could pull back further if the S&P 500 really starts to take off, because there is a probability that we even get down here, where we come all the way back and then we go. After the first wave, and this is called wave two, wave two is the largest pullback generally in the bull market. So it's usually happens after the first wave. And if I were to say, give an estimate of how big of a pullback we could potentially have, let me see if I can find it. Here we go. Price range. If we were to go back, there's a possibility we get down to, it's probably going to be somewhere in the 50% range or something like that. So we could have some further pullback to go with this ratio, which means the S&P 500 could go up. Commodities can still go up, but the S&P 500 may have a blow off top, so to speak, or a bull trap in the making. And wave three, which is the largest wave, is to come after wave two. And that's what we're doing. We're in that pullback. Gold, slightly higher today, barely. Now, I don't see any distinct pattern here in precious metals stating that this is going to turn around. It's still to the downside. We need to get a reversal candlestick, and that could happen at any second, but I just don't see it. So I remain bearish in the short term, where we could fall a little bit further. This is a stair-stepping pattern lower. Silver, we're right on support. And another thing that I look for, there's a couple of things I look for when these things try to turn. I look for the opening price and the closing price, so the size of the candlestick. This guy's got a lot of momentum behind it. It's probably going to fall further. Now you can see the candlesticks, the opening and closing prices on each of these days are getting closer and closer. What that means is that the buying and selling pressure is starting to equalize. And at some point, we should get an eventual turn. We're not there yet. I don't see any turning evidence of a turn yet. So we're right on support. We'll see if this support line holds. If this holds, we should see a sideways motion or a bounce higher and a little bit of kind of bouncing back and forth. So that's what we're looking for. Platinum up a little bit, but again, this momentum and the size of the candlesticks. So one thing I want you to do, cut this in half here, right? You cut it in half. This side looks different than this side. So when you look at this in my circle here, what do you see? Large green candlesticks and smaller red candlesticks for the most part. That's the general trend. This side here, all you see are gigantic red candlesticks and very small green candlesticks on this side. See that? Do you see the way that pattern moves? So when this is like this, I continue to remain bearish until I see a bottoming type pattern, until I see some sort of bounce where we get a higher low or something like that. So right now, I still remain bearish in platinum in the short term. I'm massively bullish in the long term. XAU to gold ratio, slightly lower today. Again, we got to see this thing firm up. Haven't seen that firm up yet. We've got GDX slightly lower today. Again, we're still in this we're not bottoming yet. We're still in this momentum downward move. I got to see some buying pressure step in here and reverse it for me to turn bullish. SILJ, same thing. Lots of selling pressure coming down. I got to see that turn, and I haven't seen the turn yet. Crude oil. So crude oil looks really good. Why am I bullish on crude oil versus a lot of these other sectors? Because I'm seeing the pattern change. So when we look at this, we cut this from this side to this side, and this is a bunch of different things. We've got a big downtrend piece here. So let's see what we got here. We draw, basically, you can draw a trend line through here, but you can draw a trend line through here. We've broken that to the upside. Breakout, retest, moving higher. We can also draw another trend line through here, which is the contact points. That's a good spot. If we can clear that, I think that's going to be pretty good. So then what I do is, if the general momentum is down and then the general momentum is sideways down here, what I look for next is the pattern. Now the pattern's changing on this side here. That's why I drew it. It was starting to change here. Larger candlesticks, and then you still have some selling pressure. Larger candlesticks, smaller selling pressure. Larger candlesticks, smaller selling pressure even yet. This looks like it's ready to go higher. We also can have evidence of this backup where you've got a downtrend and you've got a sideways, and then eventually this will work its way higher. So the momentum is shifting. This is where I get bullish. Bullish. So it looks like it wants to go higher. That's all of what I'm seeing in the charts. I know some people say, well, that's not technical analysis. Well, when you look at hundreds of thousands of charts and you look at these candlestick configurations or the way that these things present themselves, I developed it. Think of pattern recognition. A part of IQ testing is pattern recognition, if you want to know. NG, so natural gas. This guy is still bottoming out. It's trying to. Large downward momentum. We go sideways next. This might have a little bit more time. We may even see a little bit of a hump like that. So get ready. It's going to take a little bit of time. But it is, I think, trying to put in some sort of bottom. And we're at, I don't know if we got support down here or not. Nah, I just drew that line down there arbitrarily. XOP, yeah, you know me, getting a little bit of selling pressure today. Again, we are squeezing. Squeezing is a function of two forces coming together and equalizing. That is what squeezing up means. So you get a larger up move, large down move, smaller up move, smaller down move, smaller up move, smaller down move, smaller up move. And we basically go into a spot where the buyers equal the sellers. I consider this and call this the dead period. If you're on the website, you guys know that. I've been seeing you guys comment in the Discord about dead periods on other stocks. I'm like, man, these guys are picking it up. And that's what you get. You get a dead period before the move where the buyers equal the sellers, and then you get that dislocation where the buyers break that force. We are coming up from the bottom side up, which makes this a bullish formation, which will eventually break to the upside. I get bullish and I try buying on the support zones of that. It's really what I do. OIH, another one that looks really bullish to me. You put on a logarithmic. This is a inverted head and shoulders pattern. It's a massive one. And the size of the head is the size of what could potentially be the upside move, which is just massive in this. We zoom in on OIH, and we're still in this kind of congestion period in the short term. We have not broken out of it yet. The Sprott Physical Uranium Trust, we are on the upside of this, and we could be looking for a potential move to the upside here. Again, you have to be patient. Why? Because this is where all of the buying and selling pressure culminates. It all goes to a point here where this resistance line is at. And what we're doing, and this is how we're doing it, we're wearing out the sellers. The buyers are wearing out the sellers. And the reason that I say that is your lows continue to work higher. They continue to work higher, continue to work higher. We're basically grinding away at the sellers in the Sprott Physical Uranium Trust. Eventually, we'll break through this and work our way to the upside. That is where the promised land is. That's where all the resistance levels are at. And we'll get through here and move on higher. It won't be fast, though. You got to be patient. You know, people say, oh, I've been in this for a year or a year and a half. Guys, The markets take time. Nothing is immediate. URNM, a little bit more selling pressure today on the short term. We're on support, and that support line is holding. Another thing that I look at is I look for selling pressure, and then I look for a weaker move. This is kind of a bear flag pattern where we could head lower. We did head lower. We're still on support. We could go sideways a little bit longer before heading higher for URNM, but not necessarily. Buyers can step in here whenever they feel like they want to. We don't control that as investors. As investors, we need to look at this and say, let's be calm. We're above support. We're above the trend line. We've broken the trend line. We've done a retest move. Now it's just a matter of time before this thing wants to go higher. The momentum on the midterm to long term is higher for URNM. And why do I think that? Well, that's because we've got higher lows and higher highs all the way through here, and we have one gigantic consolidation pattern. Now, is it possible that this thing breaks down and comes back here and even comes a little bit lower like that? It's possible that it does that, and we still make a higher low. But everyone and their mom is going to be scared if that were to happen. I would be buying. Because why? We've got the right market conditions for this thing to go higher. And I don't get afraid that easily. But everything looks good. We're still above support for a potential sideways to higher move to happen in the medium to long term. TAN, this guy is still coiling up, guys. This thing is squeezing. There we go. Higher lows, or lower highs and higher lows all coming in right to a corner. Why do I think this is going to break to the upside? Because we entered it from the bottom side. That is one of the rules in technical analysis. Plus, all of this support resistance is through this where previous shares were traded. That's basically where people say, if it ever gets to this point, I'm going to sell it again. Well, that's where they're selling it again. So I think this will eventually break and work its way higher, especially if energy in general moves higher. COPX. This is a stair-stepping pattern higher, still looks good. And we've got a little bit of an update today. It's battling between the buyers and sellers, and it looks like we're trying to put in a bottom and trying to turn to the upside. So I would remain bullish here in COPX. Plus, I also know that, copper, the futures market was up. Keep in mind, too, that you're going to get stuck in some of these areas, however you fell. So you're going to get stuck in these areas here. And generally, if you were to cut this in half, the way that it falls is generally the way that it goes back up. So you get a stopping point here. This is an inverted head, shoulder, head, and it will work its way on higher. So it's an inverted shoulder, head and shoulders. God, I feel like I'm talking about a shampoo commercial. LIT, another one that it's slightly lower. It's just grinding sideways right now. It still looks fine. Let it be. REMX also, it is squeezing. Yeah, we've got a little bit of a fallout here to the downside. A lot of people say if you knock the door of this support that it eventually will break. But I also look at the big picture. This is a double bottom that's ready to go higher with a big bullish engulfing and a little bloody nose. So looking at this at different time frames, you're going to get different answers depending on how far you're looking at it, monthly, weekly, and dailies. REMX looks fine. Might have a little bit more sideways to slightly lower action. The S&P 500 has broken this trend line to the upside. It still looks good. I know we were down today, and it very well even could come back and do a retest before moving higher. What would kill this market is if interest rates really took off to the upside. That is what would kill it. But everything right now looks okay. It looks okay, and this could be a little flag pattern that we got going on. The NASDAQ is the same way. Could be a little flag pattern that we're putting in. There's your pole, and it's flapping in the wind, and eventually we'll work our way higher. But again, watch yields. Watch what they do. If yields were to rocket on to the upside here, I do think we could see some further downside. Again, depends how long those yields moving higher lasts. EEM. So emerging markets, another one that looks like we've got some sort of falling wedge pattern. So there is the wedge that I'm seeing, and I've seen it all over the place. That is a continuation pattern to the upside. Whenever this thing is leaning to the downside, that's generally when we go up. You can also look and kind of see if there's any sort of other patterns that's developing, like a shoulder, head, shoulder developing. That's another possibility that could happen. So This still looks good to move on higher. We've got XHB, which is also consolidating. Another thing you want to look at when you look at this stuff. So here's your double bottom. We've broken that to the upside. It usually gets stuck either below it or straight above it, or even both of them. This is getting stuck, but there's no selling pressure. Notice there's no big red candlesticks here. Higher. That's what I'll say my inclination is. Higher, higher, higher. Looking at Moo. Moo is the VanEck. We're right at support. There's not much selling pressure here. I am biased to the upside. What could change my opinions? Large interest rate moves to the upside and big selling pressure in the markets could change my opinion any second. But it hasn't happened yet. Copper futures, big old green candlestick today. That is bullish to the upside. Small down moves, sideways move. Here we go, moving on higher probably. You look to the left side. We had previous selling pressure here. Here's the peak. Here's the bottom. And look, we hit where that selling pressure is. Hit it, kind of came back, and now we've got people buying in, and I think we could go higher. Is this some sort of inverted head and shoulders? It doesn't really meet the requirements, but you could make an argument, maybe, going across here, that we have a shoulder, head, and a shoulder, maybe. But that's what I'm seeing. Looking at lumber. So lumber was down today. Yep, but it looks like we're trying to move. Remember me talking about this area here. We come on up, and then a lot of the times it pulls back to this area, and then we get some support. And that's what we're getting, support. And again, guys, I don't trade the short term here, but I do think what this is on a big long-term, big picture view, this is where I get excited. Big long-term breakout. So we broke out here. We came all the way up, and then we're doing a retest move. That is the big picture view. And I think that we're going to go, we could go sideways for a little bit, but I think we'll eventually work and grind higher over time. The iron ore market, there's iron ore. You can see we've broken to the upside. That looks really good. And it's moving on up. So that looks fantastic from that perspective. Oops. Let's go back to iron ore. Nickel. So looking at nickel, nickel has fallen back down. We very well could even come all the way back here for a full retest. It's not out of the possibility, but on a big long-term, big picture view, I think we're going to go higher on this. This thing does scream a bunch of manipulation in this thing. We broke out here, right? And a lot of the times what it does is this is accumulation. So this is a big accumulation area in here. And if I were to take a guess, guys, this is my guess. We're probably going to see a big down move in nickel at some point here. And if I were to kind of throw a pattern here, we could even come all the way back down here. People are going to write nickel off. And let's say we do like a big move like that. We come down here, just like natural gas is kind of doing. This is your double top. This is a Batman pattern, potentially. And we come all the way back down. This is your 1, 2, 3, 4, 5, 6, 7 Jesse accumulation cylinder. Man, I can't draw that. Let's do it like this. We'll say it's like an accumulation cylinder, comes back down, and then we just rip it to some ridiculous upside move. I don't know how far down this is going to go. No one knows that. But we'll watch it together. We'll see what it paints out, and we just have to see how far down it wants to go. There's no, rule of thumb here. And maybe this is as far as it goes, and we just do a retest move back to this line down here. That very well could be the case. Aluminum did head a little bit lower today. I think the companies were holding up pretty steady. This is an inverted head and shoulders. It is coming back, still grinding sideways for aluminum, still grinding. We're above support. Everything's still intact. Just takes time now. Baltic Dry Index, this guy is still continuing to head lower. How low is the Baltic Dry Index going to go? How low can it go? It is, guys, this thing is super cheap. It is cheap against all their assets. This is probably the cheapest asset or index on the markets today is the Baltic Dry Index. Shipping is the cheapest it has, I think, ever been in the history of the markets for Baltic Dry Index in relationship to other assets. It is even down at lows of 1986 and all the way down here. It is very low, and other assets are higher today, oil and all these other commodities. The Baltic Dry Index did take off kind of late in 02, and it just went ballistic to the upside. Massive moves. So hopefully it does something like that again. And I do think the shippers are of great value. Newcastle coal futures heading a little bit higher today on the short term. It's trying to put in some sort of bottom, I think. And then Ethereum, let's go back to the candlesticks. That's why the way I like to view it. We've got some selling pressure up here. That's why there's a big fat candle wick at the top of that candle. So there's selling pressure up there. And we're encountering selling pressure in both Bitcoin and Ethereum. So that's what we've got for today, guys. I'm still very much bullish on oil, especially. Natural gas is looking all right. Precious metals, you know, some of the companies are exhibiting some strength. They're looking better. So I'm starting to see signs of a turnaround in the mining companies. Precious metals still look a little bit rough, but that could turn around here in the next week, week of trading or so. 5 days, 6 days trading, so whatever it is. So let's watch that and see if it actually starts to turn in the precious metals sector. Other areas don't look too bad. They're just kind of chopping sideways. That is the NASDAQ, S&P 500. Copper's looking a little bit better. We could see an up move there. Uranium, we'll see what uranium does. It looks like it's chopping around a little bit, but that's expected with markets, and especially with as volatile as uranium is. I mean, you kind of have to expect that. We're going to be bouncing all around, and eventually the selling pressure will subside, and I think we'll move on higher when that goes. You got to be patient here. The winners are going to be the ones that are the most patient, the ones that just don't care. It's the ones that are like, whatever, right? That's where I'm at with a lot of my investments. It's like, let's just wait. I'll accumulate when things are down, definitely. And when the charts look good for bottoming patterns, I'm going to be a buyer. And I'm going to accumulate and accumulate and accumulate as long as the market conditions are good for this commodity bull market to happen. If you guys like the content, give me a thumbs up, subscribe to the channel. And if you want to check out the website, definitely check it out. We have a 7 a.m. Mountain Standard Time question and answer session coming up. So don't miss it if you're part of the community. Go there, ask questions. I don't care if you think that the question is dumb or how little you know, doesn't matter. Love to have you there. Ask whatever you want, and I'll give you my opinions. Sometimes I rant a little bit too. It depends. Sometimes it can be kind of funny. go off the rails a little bit. Not too much, but sometimes, and some people like that because they get to a different view of maybe the markets that people aren't as openly and willing to share over YouTube and stuff. So we've got that. And yeah, that's all I've got, guys. So hopefully you're hanging on the markets. We'll catch you next time. This is Finding Value.